Evening. This side Rahul Magan here as a Group Chief Executive Officer, Treasury Consulting, and also a venture capitalist. As we speak, Treasury Consulting is a multinational headquartered group based out India, Singapore, and Hong Kong. We are a multinational hedge fund. Now, by multinational hedge fund, I means our fund is taking up position in FICC. By FICC, I mean fixed income currencies and commodities. In fixed income currencies and commodities, we take up positions in fixed income instruments, currencies, and we have our own proprietary commodities desk. And we also started taking positions in US and European equities. Of course, in the later stages, our fund would be adding Dubai equities, Singaporean equities, probably Thailand, probably Hong Kong, and many more countries. But like I said, we are proprietary now, which means that none of the funding, none of the positions which we taken is backed up by any private equity or a venture capital fund. It is also not backed up by any venture debt. So just for the sake of example, if today I'm taking a position of $100, example, it is backed up by our own capital. Maybe tomorrow, if we increase this to $1,000, assuming, it would be backed up by our own capital, which precisely means that no third party investor, no third party investor can enter in our fund. No third party investor. Apart from that, as an organization, we are 100% profitable, 0% debt, 0% private equity or a venture capitalist funding. More importantly, we have other revenue platforms, which includes our trainings, our learning academy, which is known as the Sheetal Academy, our 200 plus live trainings, our financial consultancy business, our family office desk, our pension fund desk, our private placement program desk, and more importantly, our emerging OTT platform, which known as Over the Top, TRFX Academy. In case you wish to have any information, you can directly WhatsApp me, which is +91 9899 242 978. Alternatively, you can take my back office, which is +91 9818 485 155. But as we speak, we have also launched our Islamic financing desk. You know our credentials in the Western banking. I need not to explain my credentials in the Western banking, but we have also launched Islamic financing desk. And by Islamic financing, we would be replicating our knowledge, our credentials, our skills, our challenges which we throw before Western banking, and many more lovely things in the Islamic banking. We would definitely be giving more valuable tips, probably try to give a betterment and many more things via our Islamic financing desk. Islamic financing desk is live. Already two videos done. More videos on the way. You know my number, which is +91 9899242978. I repeat, +91 9899242978. Have a great time ahead. Welcome to our video titled USD Days Are Limited. I know in fact, before listening to these videos, many Einstein, Edisons, and Newtons, Graham Bell, and Galileo, who do not like our views because we are very straightforward. We always predict things much earlier than anticipated. They have disliked that. Hardly bothers. Hardly bothers. You know that I hardly bother about views, counts, subscribers on the YouTube channel. And none of my video anytime asking you to subscribe. If you wish, please go ahead. You know, guys, the world is facing a tactical shift. And that tactical shift is nothing but the debt trap. You know, I started my journey in 2007 in a treasury function. And then I used to believe that the bankers, specifically talking the bankers of top banks, which includes Goldman, JP Morgan, Citi, UBS, Deutsche, Barclays, ANZ, Westpac, and many, they are aliens. I used to believe that in 2007 because why aliens? I used to believe if you are a India head of Bank of America, it means you are exceptionally great. But by 2008, which means the 1 year of interaction with these people, I got to know one thing. They are, you know what I mean. And now in 2022, I challenged them daily. And they view my LinkedIn profile, my Facebook profile, my WhatsApp status every possible day, but never reply. Never. In 2017, I was having an opinion that the channels like Bloomberg, specifically talking, is giving you a realistic picture. But by 2021, this opinion also changed. When I saw that how Bloomberg gave substantial hype to Federal Reserve. I can't forget June 2021 when Powell said he would be hiking the rate. He just said that he would be hiking the rate, and the media, Bloomberg, gave substantial hype to that piece. And even till now, which is March 2022, the Bloomberg not yet talked about the rising US debt. Rather, I hardly seen CNN, Wall Street Journal, New York Times, and Bloomberg together. They give us substantial coverage to this, which I am going to be talking today. Forget the credit rating agencies like Standard and Poor, Moody's, and Fitch. Forget that. Because in 2008, people predicted that US at that point was the most resilient economy, and how resilient it was, everyone know. And today I would like to bring important facts on the board. That's very important. But before that, I would like to thank you, one of the most well-known hedge funds of the globe, and that is the Janus Henderson. I would like to thank you, Janus, for that. This is the report which I have taken from their website. It is in the public domain. Janus Henderson Sovereign Debt Index, April 2021, which means the statistics, the data is very, very relevant. And I would like to thank you, Janus Henderson, for that. American hedge funds give lot of research in the public. That is a very important and appreciating fact. But unfortunately, people simply deny that. Anyways, so let me give you a very important statistics which is there on the page number 16 of this report, since we are specifically talking about United States. You can see it is there on the page number 16 of the report. The three debt-ridden economies of the globe. Now, when I say about debt-ridden economies, I mean the economies who accumulated a huge debt, which includes the golden name includes United States, Japan, and China. Although, statistically speaking, the debt to GDP ratio of all the three countries are available in public. Like if I speak about Japan, it is near about 250%. But I completely deny that. And why so? Because I have no trust on the statistics provided by any country. Any country. Because history is a witness that statistics provided by any country always end up as a flawed, especially International Monetary Fund, World Bank, Doing Business Report. History's witness that many such publications end up being erroneous. Now, where the hell is the Doing Business Report now? Where the hell it is? Nowhere. But the actual statistics is coming from these hedge funds, which I'm talking. But people hardly bother. Page number 16 giving me a very relevant information which I was looking forward, but unfortunately I'm looking forward latest figures which I do not have. I'm doing the research, probably very soon I have that. Which means half each country bonds, half, which means 50%, each country bonds must be refinanced by this date. Okay, which means 50% of the bonds the country is having must be refinanced. Now, before I give you the name of the countries, I have an interpretation issue. And that interpretation issue is, what about imputed liabilities? Hardly any country of the globe, hardly any country of the globe who do not have imputed liabilities or who can claim they do not have imputed liabilities, which means contingent liabilities. Now, I will not explain in detail the four type of contingent liabilities, which is type 1, type 2, type 3, and type 4. I will not explain that because I did this explanation many times on YouTube channel. But look at the statistics provided by Janus Henderson report. They are very staring, I would say. Very staring statistics. But we hardly bother. And what is this? China, April 2025. Germany, October 2025. Spain, October 2026. United Kingdom, May 2030. United States, March 2025. Italy, August 2025. Japan, October 2025. Australia, March 2027. Only these names mentioned. There are many more countries, maybe they don't have the information or they don't have the time to mention all this. But three big names mentioned, that's very important, which is the three top debt-ridden economies. Number one is the China, which is April 2025. Second is the United States, which is March 2025. And third is the Japan, which is October 2025. And when are we shooting this video? March 2022, which means maximum 3 years. Which means the debt trap is not more than 3 years away. Not more than 3 years away. And the governments are still raising a huge quantity of money. So if I go with the US statistics, by March 2025, 50% of the bonds must be refinanced. But there are more glaring statistics, which are by end of 2020, United States having a debt of 19.6 trillion. 19.6 trillion, which was 3.6 trillion in 1995. So in 1995, it was 3.6 trillion. And by 2020, it is 19.6 trillion. And today, as we speak, it is 31.5 trillion. Which means if I look statistically, by December 2020, 19.6 trillion. Today, March 2022, which means near about 1 year and 3 months, you can say, you accumulated 11 trillion worth of debt. 11 trillion worth of debt, which precisely means by end of 2025, we would not be less than 60 trillion, or very closer to the statistics. And this is a huge number. Just imagine the cost or the interest in the books of United States when you are standing at 60 trillion. But no one is going to bother about that. No one is going to discuss about that, which is very clear, at least from my side. No one, because they know that the day they would be asking this question from Powell, who is already compromised, US dollar crash. We have a separate video on the Fed policy in this week. You know, guys, the most glaring fact, page number 17. In 1995, US had almost $13,600 debt per person. $13,600. By 2020, it is $59,100. So from 13,600 to 59,100. And according to the estimate by the Janus Henderson, by 2025 estimated, which is 3 years from now, you can say it would be 74,400 precisely. Do you still think United States is in a position to not to be a bankrupt economy by looking at these glaring statistics, which we always tend to ignore? We always tend to ignore. But I never ignore that. Because in 2020, you was having a debt of near about 19.6 trillion. By 2022, that is March, the first quarter not yet done, the same statistics ended up 31.5 trillion. And by the way, it does exclude imputed liabilities. Remember that. It does exclude imputed liabilities. By end of 2025, it would be height. But what are we talking? US dollar would continue to be a reserve currency. The highest stupidity of the life. Because one of the biggest stupidity is we always tend not to change. Whatever is surrounding us, we will not change. Until otherwise, the environment which is surrounding us change. Just like in case of Evergrande, who was once sitting at 325 billion of asset book, and today, boom. See you in the part second with a very interesting fact. Welcome to part 2 of the video. In 1995, US was having a debt of 3.6 trillion. By end of 2020, it was 19.6 trillion, which means 6 times. By end of 2000, or you can say the first quarter of 2022, as we speak, it is near about 31.5 trillion, which means 50% increase. 50% increase in 1 year and 3 months. Okay. And these are public statistics. But having said that, when you have the debt, you have the finance cost. Now, what the hell is finance cost? Finance cost is the cost that comes in the books because you have the debt. And you cannot run away from that cost. That's very important. Thanks to Janus Henderson for providing these statistics. On page number N16, they clearly mentioned that the cost of servicing all this debt, which is 19.6 trillion, is higher in US than the rest of the world. The interest bill in 2020. So when I speak about 2020, I'm talking about December number, is $479 billion. It means the government spent 479 billion in terms of interest payment. But did any newspaper, any Bloomberg, CNN, Wall Street Journal, preferably any other media platform, did highlighted that? Never. They not even thought of highlighting this. They not even thought of highlighting this. Because they know the day they would be highlighting, US dollar will crash. And if you are thinking that US dollar will not crash, then wait for the time. Now, if by 2020 it was 479 billion as per the statistics by Janus Henderson, by first quarter 2022, the debt level has increased by 50%. Am I correct? Because now it is 31.5, which means so would be the interest cost. Common sense, because if your debt was 100 and now it is 150, your interest cost will also rise by 50%. It's a common sense, right? So 479, 50%. It's around 240 billion. Am I correct? 240 billion. So 479 plus 240, around 720 billion. Common sense. It means as we speak, so 2022 closure, 9 months from now, we can say, we won't be having debt less, the interest payment lesser than 720 billion. 720 billion. Use your common sense. How much time US will take to reach 1 trillion interest payments? The job is already done. Guys, the job is already done. Thanks to Powell. We are making this or shooting this video as of 22nd March. And Federal Reserve is done with the first upgrade of 25 bips. Gold hasn't fallen. Rather, as we speak on 22nd March, it's near about 1945. It means 25 bips of increment in the debt servicing cost. 25 bips. I will not compute these statistics. You compute yourself that by end of 2022, the minimum interest cost for the US would be 720 billion. You heard me right, 720 billion. And Federal Reserve done with the hike of 25 bips. And today, the great universal banker Powell, who is already compromised, and under his leadership, Federal Reserve did the scandal, said that they would be hiking more if required, which means the cost of servicing the debt would be substantially higher than I am estimating. Probably by 2023 itself, United States will reach to a $1 trillion interest rate figure. And the current account deficit as we speak is negative 2 trillion. So your economy is falling. China is giving you a very, very competitive edge. No doubt about that. Not only in terms of technology, in terms of space, in terms of banking, in terms of Chinese yuan in the reserve currencies of the globe. Your debt is near about 31.5 trillion as we speak. The minimum interest cost, if I extrapolate, is not less than 720 billion by end of 2022. 720 billion by end of 2022. And if I go with the Federal Reserve theory that they are believing to contain the inflation by hiking the rate, then your debt cost will grow substantially. Probably $1 trillion. Probably you can say $1 trillion. Only an idiot in the whole world can believe or ignore these glaring statistics. Basically, ignore these glaring statistics. It is like Evergrande, who once used to had 325 billion of a debt, asset side of the balance sheet, 325 billion. And today, it is crashed. And Evergrande is not the only company. We had many. See you in the last part, which is part 3 with concluding remarks. Welcome to the last part of the video, which is nothing but the closing remarks. One thing I'm very clear that on a minimum base, United States is standing at 720 billion worth of interest payments by end of 2022. And this, by the way, excludes any form of hike by the Federal Reserve. And I'm sure that many Einstein Edisons would tend to ignore this 720 billion figure. But I'm not going to be ignoring this. Enron, Wirecard, in India, infrastructure leasing and financial services, Diwan housing, many global scandals. People tend to feel Lehman Brothers, Merrill Lynch, Bear Stearns, Citibank at one point of time reached just $1. It means one share of Citibank was at $1. American Insurance Group, and many such examples. History is a witness that if you tend to be an idiot, you always lost. And I'm not an idiot because I'm very clear on one thing, which is United States days is limited. Now, when I say about days, I repeat, USD as a reserve currency. Because when I speak, and I have a detailed video in that regards, the Chinese yuan dominance is growing. And the latest example is the Saudi Arabia, who, according to the public information, is signing 6-year deal with the Chinese government to sell the oil and accept Chinese yuan. Now, which precisely means that as we speak, Chinese yuan is also a non-deliverable currency. Saudi Arabian Riyal is not a non-deliverable currency, but it's a pegged currency, which means that the currency movement is more or less same. Highly predictable, you can say. But Saudi Arabia decision to have Chinese yuan as an oil currency is strategic. But life is great because I haven't seen, and especially Bloomberg, talking about that. And they won't because they know that, because if they speak, then the questions will raised on Federal Reserve. You know the rest. Probably by end of 2025, the figure which is given by the Janus Henderson of having 80 trillion sovereign debt might be a tip of an iceberg, because I personally feel that by end of 2025, United States would not be lesser than 50 trillion debt. And it is ballooning. So would be the interest cost. It's a common sense not to ignore this fact. I don't see that USD would continue to be our leading reserve currencies of the globe. There was a time when USD as a fraction of the global reserves was near about 75%, which means 75% of the global FX reserves was in US dollar. And today, as we speak, it is about 60% and coming down. Coming down. Probably by end of 2025, it might be 50%. Russian war is going on. Russia is unrelented. It is not, they are not giving up even after a lot of sanctions. And they are very clear that if more pressure to come on them, they might sanction the dollar. Probably they link ruble with the gold. And if this happens, if ruble linked to gold, which I feel a very probable chance, then you know what I mean. To conclude, a country with a debt of 31.5 trillion, debt ceiling can breach any given period. The debt is accumulating and at a much faster pace than we are anticipating. At end of 2020, the interest cost was 479 billion. The debt level grew by 50%. So common sense, the debt by end of 2022 minimum would be 720 billion. Federal Reserve is hiking the rate. Stupidity. More hike are on the cards. And soon we have a more mess on the way. And this is my personal assumption. I let it be very honest. And first of all, I thank you to the Janus Hedderson for providing this report, although there are much more statistics which I am looking into. And thank you that I just wish I have more such updates on the internet. We are heading towards a complete collapse. And those who are thinking, I repeat, those who are thinking that gold, which is who, by the way, is non-interest bearing metal. I don't know the name of an idiot who call this as a non-interest bearing metal. But anyways, if you are thinking that gold would continue to be where it was, then upgrade yourself. Upgrade yourself. Gold would soon be beyond imaginations. Beyond imaginations. And I'm not talking about the world war. I'm not talking about, any natural disaster. If I add the World War III or any form of natural disaster which is coming because glaciers are melting, then God knows what would happen. I'm not at all, I repeat, I'm not at all bullish on US dollar. Not at all. And to me, it hardly matters what people think about this video. Because I knew that in 2018, when I spoke about SoftBank, people ignored that. And today, 2 lakh crores worth of scandal happened only in India. But about the globe, I don't have any figure, I don't have the data. This is Rahul Magan from Treasury Consulting Group. Dear Joe Biden, President United States, be ready, the days are limited. My number 9899242978. I repeat 9899242978. Our back office number 9818485155. 9818485155.